Alright, so in this video we're going to be talking about invalidation of levels. Alright, why is this important for you to know? You need to know what levels are going to be valid to you each day in the market, each week in the market, each month in the market, and I would say every 6 months as well. Okay, it's not every level that was relevant this month that is still going to be relevant the next month, or it's not every level that was relevant yesterday that's still going to be relevant today. Alright, now what does that look like? I'll be using the daily chart for this interpretation of price, or for this explanation rather, and it also applies to every other time frame. We'll see if we can shuffle between time frames, but let's see. Okay, so to start, we're going to start with the other blocks. I think this one is the most common one, and almost everybody that has studied ICT's concepts has an idea or understands why or understands when another block is invalidated. Okay, now what I'm going to show you here, I'll explain why in a second. Okay, now I'd like you to see this other block here. Okay, now when it comes to blocks, right, if you want to check if they've been invalidated, you draw them by the bodies. Alright, you use the highest body to the lowest body. Okay, if you watch the previous video, alright, part 1 and part 2, you are definitely going to understand why I'm drawing out this other block. That is our consecutive order block. Now, the moment we closed above the 50% with a body, a bullish body, this other block became invalid. Alright, it became invalid automatically. So we're not going to be using that level again. Alright, yeah, so that's that. That is that. But obviously we still have other levels within here, which could be the reason why price moved the way it did today. This inversion fair value gap. Yup. So that's our level right there. Okay, let's move on to the next level. Let's look at fair value gaps. Now, what invalidates a fair value gap? What invalidates a fair value gap? Now, a fair value gap is invalidated, okay, when we close, for instance, this is a bearish fair value gap here. When we close above it, a bearish fair value gap with a bullish candle body. And for a bullish fair value gap, when we close below it with a bearish candle body. Finish. That's all. Alright, that's all that invalidates it. Okay. Now, do note that it's not. Oh, how do I explain it? Okay, I already explained what the balance price range is in the previous video, so I don't think I need to repeat myself. But as you can see, it's invalidated from bearishness. Now it's being used for bullishness. Okay, this is going to be a pretty short video, I guess. Alright, then there's another thing I want to let you know as well. There are specific levels within the fair value gap. You understand as we progress in this series why what I'm telling you now is important. Alright, there are specific levels within the fair value gap. We have the 25% level, the 50% level, the 75% level, okay, and the 100% level. Obviously focusing within the quarters, right? Now, when we have a week, for instance, this week had traded all the way from, you can see, all the way from 0 to 25 to 50%. Now, in my trading, okay, I consider this whole area has now been invalidated for use, right? We will not use this area for bearishness again, okay? We won't use it for bearishness again. We won't use that whole area for bearishness again, right? Yeah, we won't use that whole area for bearishness again. As you can see, if you are wondering about this rejection here, you rejected from this inversion fair value gap here. You understand that that's where we rejected from, right? That's why when price got here, the only thing it could do was reject from this high up here. It didn't use these areas again. We rejected from this high. Alright, if this doesn't make sense to you yet, just allow the full progression of the video. Allow everything to take its course. So keep watching the videos and watch the whole series that I'm releasing, and you will understand it. Alright, so let's move to the next one, the suspension block. Okay, I believe we just looked at the suspension block. Now ICT treats, it's important you know that ICT treats the suspension block like a fair value gap. Okay, as you would treat a fair value gap. Let me draw this is a suspension block right here. Alright. Now when does the suspension block become invalid? Okay, the same thing for a fair value gap. When we close below it, a bullish suspension block, when we close below it with a bearish candle body, okay, now it's going to be used for bearishness, like an inversion fair value gap. Same thing and vice versa for a bearish suspension block. Okay, when we close below it, above it, with a bullish candle body, alright, it has been invalidated and will be used for bullishness. Alright, so that's that on suspension blocks. Now let's go to the volume imbalance. I believe this is the very key one, so please pay attention. Right, there are many examples where I would have read the bias wrong just because of one volume imbalance. It's that crazy, because you need to understand how each PD array works. Alright, you need to understand how each PD array works. Let me drop a gem. You need to understand how each PD array works to apply the market maker models. If you don't understand how each PD array works, when they are invalid, you will not know how to apply the market maker models. Your consistency would be iffy, right? Here and there, here and there, here and there, and you won't fully know how to read bias. Okay, so this is a volume imbalance in and of itself. Although together they make that suspension block. You would know about this if you watch the previous video. But now, what invalidates a volume imbalance? Alright, a volume imbalance lacks candle body between these two price points. The open of this candle and the open of this other candle here. Okay, the open of the candle on Friday, June 19th, and the open of the candle on 22nd of June 2026. Okay, it lacks a candle body overlapping between it. You understand? And what do we want to see? We want to see a candle body fill this place and price move away from it. Alright, so as you can see, what do we have? We have had a candle body, this bearish candle here, that filled this place. It closed below here, and then the moment we closed back above, right, at that point we immediately know that that volume imbalance is no longer valid. We won't be using it for bullishness again, we won't be using it for bearishness. Same as this volume imbalance. The same time it was invalidating this one, it invalidated this one above here as well, that formed on the 22nd of June to the 23rd of June. So you can take note of that. But now let me show you other ways that a volume imbalance can be invalidated, because you've seen that one, alright? You might see another way and it might cause you confusion. Okay, yeah, perfect. Exactly. Now let me show you this. Can you see this volume imbalance here? As you can see, it's not like we had a bullish move above it, then a bearish move below it, and a bearish move below it. A bullish move above it on the 27th of May, and then a bearish move below it. We didn't have that, right? It was just one bearish candle. But what can you see? The bearish candle, okay, body overlaps with this candle's body. You understand? It is above this candle's body. So meaning that by the time price closed below this volume imbalance here, okay, it has overlapped this entire area with the candle body. So the volume imbalance is officially invalid. It can't be used again. You understand? It can't be used for bearishness again at all. Alright? It can't be used for bearishness again. So keep that in mind. Let's see, the next level we're going to be looking at is the breaker block. Now when it comes to blocks, just take note that once they are 50%, just like other block, breaker block, mitigation block, once they are 50% is invalidated, they automatically become invalid. So let's go to the breaker block first. You see this breaker block here, all right, which I showed you from the previous video. You will understand if you watch the previous video. So if you've not watched the previous video, I would say go and watch the previous video. Now, okay, let me just quickly explain what's the breaker block. A breaker block, it's basically the middle point of a liquidity sweep. So we swept liquidity here, okay. Liquidity below every swing low, there's a pool of liquidity. Above every swing high, there's a pool of liquidity. What is a swing low? Three candle formation. We have a candle with a higher wick to the left. The middle will be the lowest wick. Candle to the right with a higher wick than the one in the middle. Alright. Then we have this swing high here as well. Just the opposite of a swing low is a swing high. Then we swept the swing low. Then we went above this high. That makes it the breaker. So extend that out in time. What do we have? The moment price traded into the candles. Alright, the consecutive breaker. Just watch the previous video and you will understand. Okay. Assuming price had closed with a candle body, a bearish candle body below this, right, it will automatically be invalid. We won't be able to use the breaker block for bullishness again. Alright. Now let me show you another example. Let me extend this breaker block out in time. And note, I focus on the candle bodies, just like we did for the other block. I focus on the candle bodies. I don't focus on the wicks as much, just the candle bodies. So as you can see, the moment price closed above it here, above the breaker here, the breaker 50%. Alright, you can clearly see we moved past it. Although we consolidated here a little bit, which is okay. The other reasons why we can consolidate, not the breaker. Alright, and then we moved above. So it's been invalidated. It's no longer a point to hold price down. Alright, so now the mitigation block, same thing. Focus on the candle bodies. So you see, it's pretty simple. It's not something hard. Focus on the candle bodies. What can you see? We've invalidated this mitigation block. So we can't use the mitigation block as a right now, right? It's invalid. Alright? So it's important to know this because it helps you out with buyers. It helps you to know what to reach for, what not to reach for. Alright? Now rejection block. Once you hear block, you treat it the same way. Okay? Remember, a rejection block is a swing low. It's found swing low, swing high. In a swing low or swing high. Alright, I've explained what a swing low is already. So just the opposite of it is a swing high. Right? A swing low is a formation, is a 3 candle bar formation. Alright, we have, you can see this candle on the 1st of July has its low, okay, higher than the candle in the middle that formed on the 2nd of July. And the candle on the 3rd of July has its low higher than the candle that formed on the 2nd of July. So the candle in the middle has the lowest low amongst all of them, a candlestick low. Okay, so that's what makes it a swing low. And the opposite would be for a swing high. The candle in the middle will have the highest high among the 3 candles. Okay, so having said that, now where do we find the rejection block? The rejection block is the candle with the lowest candle body down to the lowest wick. Alright, so you see this candle that formed on the 3rd of July, its candle body is the lowest here, right, down to this wick. So if we close below the 50% with a candle body, okay, if we close below the 50% of this rejection block with a candle body, a bearish candle body, and for with bearish candle body, obviously we've invalidated it. Same thing for a bearish rejection block. If we close above it with a bullish candle body above the 50%, we've invalidated it. Okay, now I want to also show you this example here. You can clearly see, let me show you this. You can see this is a swing high. If you were to say, is there a rejection block here? You might want to draw out this one. Alright, but let me explain to you why it's invalid. It's invalid simply because, let me draw this for you so that you can clearly see. If you measure this week, the 50%, if the third candle, okay, of the rejection block closes above that week 50% with a candle body, just automatically know that it's no longer a rejection block. Alright, it's not a bearish PD area at all anymore. So take note of that. So that's all with rejection block. Now let's head to week gap. I think it should be pretty easy. For week gap, I think I even explained what invalidates it in the previous lesson. Alright, I usually look for 4 candles, sometimes 3 candles. Check the previous lesson, you understand why. For my week gap, it's found in a swing high, but sometimes I look for 4 candles, okay, where there's no massive confirmation as to the fact of bearishness. Alright, in this case, this is a swing high. If we don't have, let's say, a market structure shift, inverted a gap, something that will let me know that we're bearish, even if we traded from a PD array, there's a fair value gap I drew in the previous lesson. Just look to the past, you'll find the fair value gap that price rejected from here. Alright, if we don't have a massive confirmation, I'll be looking for 4 candles. Right now, the highest, the longest week within those 4 candles is this candle on the 24th of June. Alright, you want to split it down into quarters. How do you split it into quarters? You use the fib tool. Now, if the second candle has already used the 50%, then just forget about everything else. That's no longer a weak gap. That's no longer a weak gap you want to be focusing on. Alright, if that second candle has done the damage already by trading to the 50% and using a wick on that area, just forget about it. Alright, that wick has been filled. You understand? So there is no more weak gap there. So what do we do in that scenario? Just don't do anything, just let it go. Alright, let it go. And the opposite will be for a bullish weak gap. Alright, so I think that's all you need to know. Let me show you what a weak gap looks like when it's not being tampered with. Okay, yeah, perfect. As you can see, there was no major reason why I would say we are bullish until the 4th candle here. So as you can see, the moment price traded into this area, alright, this long wick here had not had its 50% been traded to. So you can see when price came in and used it, boom, and went up. Alright, after that we can't utilize the level again. Simple, very, very simple. So that's that, and I hope this video helps you. I hope and I trust this video will help you. Just stay tuned for more videos that are coming up. Subscribe to the channel, leave a like, alright, share the video, alright, with any struggling trader that you think will need to know these things. Alright, if you've not been able to get a course for trading, alright, this would actually help you out. Okay, and if you want to join my mentorship, you want to learn how to trade, you want to trade with me live, alright, click the link in the description below. If you want VIP trading signals, sorry, not free, VIP trading signals, if you don't want to go through the stress of trading, you just want someone to do it for you, alright, I have a signal channel. Check the description below as well. Alright, if you want to code any of ICT's trading strategies, you want to code it into an EA, you want to make an indicator, you can reach out to me. Alright, I'll also leave my contact details in the description below. You can reach out to me there, and we'll talk about what to take to do that. Alright guys, peace and love. Till the next one.